Hello, active traders, and welcome to Breakout Trading Success Secrets for 2018. I'm Ken Calhoun from TradeMastery.com, and I'm joined by my longtime colleague, Harry Boxer from TheTechTrader.com. Harry, it's great to have you with us here tonight.
It's fun to be here, and it's always good to do webinars with you.
Yeah, thanks, and a really big turnout, folks. We got almost 600 registered for tonight's event, so thank you so much for being here. Taking a little bit of your time out of your schedule. Harry will go first, and then I'll go second. We'll each do 30 minutes. But before we start, as always, all information is for educational use only, not making advice about what to buy, sell, or hold, and by watching this screen, not to make actual trades. We don't make any profitability or performance claims. So let me go ahead and introduce Harry. Harry Boxer is the founder of www.thetechtrader.com. He's a 45-year veteran technical analyst and stock picker. He's author of Profitable Day and Swing Trading. It's a great book. Highly recommend it. And he's been featured at Money Show, Traders Expos, TheStreet.com, CNBC, and Forbes. So great to have Harry with us tonight. He's one of the top guys in the industry to learn from, and I wholeheartedly recommend you guys learn from Harry Boxer. He's one of the top experts out there, one of the other great breakout traders in the world. So without further ado, let me go ahead and turn the show over to Harry. Fasten your seatbelts. You're in for a really good professional strategy session tonight, and let us get underway.
Okay, hold on a moment. I'll be right with you. There you go. I wanted to talk to you guys today about what I do and what I think I do best, and that's the day trading. I'm a big believer that the way to safety in trading, if there's such a thing, is number one, trade with stops, trade with targets, and day trade if you can, because at the end of the day, you're back in cash, and you never know what's going to happen overnight. We've certainly seen a lot of ups and downs in the market of late, and I'm quite concerned about the length and depth and breadth of the market, meaning the length without the breadth. If you look at the McClellan oscillator, and it's one thing that my members in my room are like astonished. The market is at 9-year highs. We've surged, we've spiked, and yet the McClellan oscillator is plus 20. That's nowhere near overbought. And that's because it's comprised of advanced declines and up-down volume, which have been much narrower. So you have to be in the right stocks, because I know a lot of people that aren't making as much money as they think they should be, and that's because they're not picking the right stocks or not trading with the right targets and stops. I recently wrote a book called Profitable Day and Swing Trading, using price volume surges and pattern recognition to catch big moves in the stock market. Not only, look, my philosophy that I talk about today is applicable to all time frames, but I use it most often in my intraday 1-minute chart day trading. We also do swing trades, which last three to 5 days, as much as 3 to 5 weeks in my room. Some of them continue to move up, and in the case of NVIDIA or Clayton Williams, I can go on and on of stocks that went up 8, 10, 12 times in less than a year and a half. So those are the kind of stock you want to catch if you can, of course. But today I'm going to focus in on doing swing tradings and day trading. Then let's talk about how would a person prepare properly for the trading session. Number one, you're looking at stocks that you held or on your watch list from overnight. I always believe that you should constantly have a watch list. Now, my watch list is very long. It consists of many stocks, but that is always there because these are stocks that I've either traded recently or in the past year or so, and I keep them on a list because you'd be surprised how often they pop up again. So what we're looking for is we're analyzing patterns from the previous trading day to see if a day trade was so strong that it closed with a pop or into the close on a strong rush, and maybe is set up for maybe an opening gap the next day, maybe a trade the next day. But my morning routine consists of basically pre-market news sources, looking at percent gain leaders on all the exchanges. I want to see price and volume. I create what we call a focus list. The focus list it consists of stocks, again, that are gapping or running or moving. And after I look at them, and by the way, I get online with my people early in the morning around 4:30 a.m. LA time. That's where I'm based. And I'm online for about an hour before I even talk to my people. And what I do is I go through all the movers, all the charts, and the related news for those, and I gauge which ones might be good for a focus list, which I publish pre-market to my people, and they consist anywhere between 12 and 15 stocks normally. Then maybe as many as 20, but when we go over that list in what we call my pre-market talk, I'll do a webinar, live webinar. I'll show you charts, and I'll talk about the charts that look like they have the most, not only the most probability of moving, but also are having the biggest surges pre-market and maybe are trending and are flagging and consolidating, setting up mainly for the regular trading session. And that's what we're looking for. I narrow my focus list down. I'm looking for stocks that are breaking out across previous resistance and or short. If on the short side, looking for stocks that are breaking support. We utilize moving averages that are 10, 21, and 40-day moving averages, but I am now using 50. And then I put key trend lines and channels and lines. You'll see that all today when we go over the charts that I'm going to do a look at. Now, what you need to do once I get on, after the market opens, after I'm done giving my pre-market routine, and the market opens, usually 10 minutes after the opening, I'll do another webinar, and it's called the first update. Now, basically, that first update and early trend development routine is something that's going to be analyzing the first 10, 15 minutes of trading while I'm talking, as I'm talking, and usually I'm on for 35 to 55 minutes early on to discuss the early patterns. You'll gain a lot of knowledge, not only on what early patterns look like and which ones might be best, but you'll also see the stocks that have gapped up pre-market and what they're doing after the market opens, whether they're trending or whether they're popping and dropping, like a lot of biotech, Chinese, and Bitcoin stocks are pretending to do lately. So we want to be in stocks that are going to trend during the day, preferably at a 45-degree angle from left corner to the right corner, right to the lower left corner to the upper right corner. That's the angle you want to see on those charts that we're looking, and that's what we're looking for. A couple examples. Well, here's when we're looking for pennants, coils, flags, anything that's what I would call a continuation pattern. And here's a stock that gapped here, ran up, and then pulled back on a little wedgie. A very, very low volume at the apex right there on a very little bar. When it popped out, we bought it. Now, yes, in this case, it took a couple hours before it started moving, but it never broke support. It formed a beautiful, narrow bull coil, and right near the end of this coil, it got really quiet and narrow and almost hardly trading at all. And the volume finally came in and it popped. The stock broke out. We put a buy on it at about 35, 5.25. It popped quickly to 36.5, flagged for another hour and a half, and then at the end of the day, it was over 38. We had a nice, successful 3.5 point trade, and that's what we look for all day. Notice again the trend from the lower left-hand corner to the upper right-hand corner. It's amazing how many stocks will trend and channels. And if you draw the lines across here along the bottoms, which I didn't in this case, you'll see that that was a rising channel. Here's another example. Zone. Perfect chart for me because it gapped big time and ran very sharply early on. Now, how many people would look at a stock that went from about 4 to about, call it 4 3/4 very quickly, and look at the pullback consolidation wedge. When it broke out here, we put a buy on it. It went up a little bit and then pulled back and kind of tested support. And that was my trend line right there. You can see it. The reason I draw that trend line is because, number one, it came to a point right at support in here, held that. Then I drew the trend line when it started to bounce out of the flag, formed a pennant or a little minute tight bull coil, ran up again, formed another one. At the end of the day, it was 565 from our entry point, about 475 for a nice 90-cent pop or about 20% trade. Not bad in one day. That's the kind of stuff we look for every day in my site. And there's hundreds of those examples. Here's another one. And this is a very different one, but I want to point it out to you. After it exploded and pulled back, it formed a very tight coil, where we got very quiet there. But when the volume came and popped out, that's where we went in, around 21.25, if I recall. Pennant, flag, another one, and then boom, 21.25 to 25.20, almost 4 points. And that only took about, let's call it 2 hours. And then it went into a long coil. But most of us sold the spike up in here. Some of us got out at 24 and some at 24.5, 25 range. But that was a nice little day trade. But based on the pop and then the pullback and coil. A couple more examples of stocks that are trending, and I also want to show you this example is what we call the 5-wave Elliott wave type move too. Stocks tend to move in 5 waves. Most people don't really realize that. If you see a 5-wave move by lunch hour around 12, sell it. And the reason I say that is because most professional traders that are trading house money, brokerage accounts, or they're day traders for a large institution, they'll they're paid based on the amount of money they make. So if they're going to lunch, they usually take it off the table. If you don't see this pop here, this is the initial thrust from the opening, and then a nice wedge. This is where we went in when it broke out. That was about 9.5. Quickly went to 10.5, 10.60 for about $1.10, and I mean fast in about 20 minutes. Then another hour-long coil, and then another breakout right up just before lunch, and it spiked up. I think most of us got out about 11, 11.15. It did go to as high as 11.60, and then the pullback. But that's the kind of example we look for in my site at thetechtrader.com. And by the way, in my site, you can join for 2 weeks for free, no credit card. Just join up, check us out for 2 weeks for free, and you'll be able to get all the services and take a look at what we're up to. Here's a really interesting example of a stock that had a huge opening gap, ran up a little bit, pulled back, and had a very quiet, tight little coil on low volume right near the apex. That's what I called I coined the phrase a low volume ebb. Let's scroll in a little bit. So it got very quiet and narrow in here, very, very low volume. And then when the volume started to thrust and it popped out, we bought it right there at about 37.25 area. And then popped all the way up to 39.25, 2 points. Flag, popped, wedge, popped, and just kept going until it got up to over 40, near 41. It was a really nice 4-point trade right there. And that's the kind of stuff, again, we continually look for. And you'd be surprised how many dozens and dozens of stocks do that, literally every day. And how do I know that? Well, let me show you some examples from today, just today. I'm going to bring up my charting system and show you some stocks that we traded today. Hang on a second. So just so you don't think that I cherry pick these stocks, this is the stock from today that we traded. A 1-minute chart. You can see the opening, huge gap, run up and falling wedge right to the 50-period moving average. That's the support level right in there. As soon as it started to move and broke out, we bought it around the 27.75 level. It immediately ran up to resistance and coiled. I was okay with that. Obviously, the bullish consolidation. And again, near the apex, low volume at it. This is a good thing. See that one bar that broke it out right here? Right in there? That's the breakout, the real key breakout for today. And that was at 28.25. Those of us that didn't buy it there, bought it there, or added to it. And within an hour and a half, the stock traded all the way up to over 30 from the 28.25 range. It was about a 2-point trade right there. With the next several hours it coiled, and at the end of the day, it reached almost 31. Excellent day trade. Another one we traded today was Overstock, which we've been trading a lot lately. And the reason we trade is because I'm finding the volatility so incredible that the stock is getting between 5 and 8 point ranges. In the morning, it plunged at the opening. Formed the wedge and mini base, whatever you want to call it, right there. This was the breakout right there. Notice the volume picking up as it breaks out. Most of us went in and just went up and cracked 70. Within 30, 40 minutes, it was 74.5. My target was 74.5, and we reached just underneath it, close enough for government work. And it came down and bounced, formed a, what I would call a really nice looking coil. See it? Over the next couple hours here. Then broke out. Some of us went in when it broke out, added right there when it went 74. My target was 77. It didn't quite get there, just under 76. And at the end of the day, you can see what happened. But that was a nice trade from there to there and from there to there. Interesting trend on Weibo. Now, I've been trading Weibo. Get this. I want to show everybody this pattern. Ken, this is a stock that I found a massive inverse head and shoulders. And when it broke out, a year and a half ago, it was 21. This is where I put on a swing. See, sometimes a swing will just continue to go, especially when you catch it right. This one went from 21 to 130 today. Amazing, more than 6-fold increase. But today, as a day trade, and we often day trade stocks we like, popped and flagged, and when it broke out here, I put that line in there because most of us bought it right around 76. And within, I'm sorry, that's the date. Let me go back. This is where we bought it. Okay. It popped and pulled back from the wedge and broke out. That's where we bought it around 125. It then popped and flagged, popped and coiled, just kept stair-stepping its way up. And by 1 o'clock, it was up to 131. Now, it already had multiple waves by lunch hour. Some of us sold it up in that 129 range, but most of us were in about 125.5. Nevertheless, anywhere between 3 and 6 points today for day trade on Weibo. good day trade on Supernus today as well, SUPN. I like this company a lot. And let me show you something else on this one. This is where I put a day trade on it, a swing trade. When it broke out of the falling wedge with a big bar up here and pulled back, consolidated, that's where I put it in right there, about 13 3/4, I recall. Then about 6 months, it traded up to 27, pulled back, and then eventually got up to 50. It is a couple of years now, but anyone who has a stock that they bought at 13 would gladly wait 2 years to get 50, I'm sure. 4 times your money, thereabout or more. So, and you can see right now it's actually breaking back out again. But on a day trade basis, today, after it popped, it went a little bit of a quick 1, 2, 3, 4, 5 little Elliott wave, wave 1, and this was wave 2. When it broke out of the falling wedge, after getting down here on low volume, the volume came into it, about 44.25. Most of us went in, or some of us did. The rest of us didn't go in, went across 45, and you can see it reached 47.20 in about a couple hours later. That was a good day trade there too. Just an example of what the kind of stocks that we are looking for every day. There are a couple others. One other one, Momo. Certainly had Momo today. M-O-M-O. There it is. So it exploded for the gap, and then it worked its way into a wedge in here. When the wedge broke out, we bought it. We pulled back to test support. Nice little flag. It broke out again. Some of us bought it then. But see, here's the thing. Most people think you got to catch the top and the bottom. You don't. You got to catch a big chunk in the middle. That's all I care about. And in this case, even though it had gone from 25 and change to this point here where it was 26.5, up $1.50, the momentum was so strong that it went from 26.5 to 28.40 at one point, 28.30. So a nice day trade there, and that was today. These are examples of stocks: Momo, Supernus, Weibo, Overstock, and ICHR are all day trades today on my site. Just so you don't think that I'm cherry picking stocks, because the truth is, it's easy to do a presentation with perfect patterns. Perfect patterns don't happen all the time, but every day I'm finding 3 or 5 stocks that are running and trending and doing very, very well. What we do is, number one, the early trend development is very key, especially the first 30 to 60 minutes, 30, 40 minutes, I think. But even in the first 10 or 15 minutes, we want to develop a disciplined, organized, focused approach. We want to monitor closely the early price volume action. We want to create a focus list prior to that, and then cull that list down so that we're following fewer and fewer stocks. Because the truth is, how many stocks a day do most people trade? 2, 3, 5? Yeah, most people don't trade more than 5 or 6 stocks in one day, and most of them only trade 1 or 2. So my point being is that with all the stock ideas that I give out every day, you have to choose, because I give stocks out that are low price, some that are medium price, some that are higher price, depending on your preference, what you're comfortable with, what your trading skills call for, or what your account is, basically how big your account is. A lot of people can't afford to trade a stock at a couple $100 a share, because how many shares can you get, right? And so I'm a big believer in leverage. Most stocks I give out are between 5 and 40, and the reason for that is you take a $6, $7, $8, $10 stock and moves $1, $2, it's 10 or 20%. Hard for a $70, $80 stock to go up, 10 or 20%. You got to go up, 15, 20 points. So my point being is that I find that much more leverage in lower price stocks, not low price stocks, because in my site you're not allowed to discuss any stocks under $2. I don't want garbage stocks. I don't want these pumpers and dumpers. I want some stocks that have liquidity as well, instead of higher price stocks that we can trade. Let's show you some more examples. And by the way, I just want to talk about one thing. Warden Brothers is the only company in the world that's developed this pattern, this indicator. It's called the volume buzz indicator. Let me take a minute, because if you're not on TC2000, you ought to think about getting into it. Volume buzz is probably the most important technical indicator you can use, especially in the first half hour. What it does, at any given point in the day, it'll look back over the previous 100 days at that point in the day. For example, at 9:45 a.m., 15 minutes after the opening, it compares the volume at that moment of the day against the last 100-day average. Okay, and then it'll tell you what that value is and what the percent gain is. For example, if a stock normally trades, say, 20,000 shares in the first 15 minutes, but it's trading 200,000, then you have 1,000% volume buzz. And that, to me, anything over 400, 500, 1,000% indicates money flow, indicates interest. And many, many times I'll see 5 and 10,000% more volume than average in the first 15 to 20 minutes. That's a big heads up for a trader, because that'll tell you where money's flowing. It's something you want to take a look at. Now, during the course of the day, we look for these intraday rising channels. I gave you some examples. Here's one. I want you to look at XPO. No, for some reason this isn't coming up right now. One second. I'm having a problem with this. Okay, this may work. Hang on. 1 second. There we go. So XPO chart is a perfect example of a day trade that worked perfectly for us. And here's another example of what I want to show you. Stock gap big time. Look at the buy money opening. And it settled into a beautiful little coil and got very quiet near the apex. See this little volume zone right there? Sometimes you get a little high volume bar, stock doesn't go anywhere. That's called the high volume zone. It's usually an indicator or a precursor of a move. In this case, it was. The stock went from 20 to 2140, coiled, ran up to 2268, flagged, and ran up to 2370. We got in about the 2065 area, 3 points. Very nice trade. But look at the rising channel from left corner to right corner. You'd be surprised how often a stock will rise in a nice, beautiful, parallel line channel. And at the end of the day, you can make your choice. You want to look. In this case, for example, there was no reason to sell the stock at any point in the session, other than that it reached the top of the channel and you knew it might be pulling back to consolidate or from some sort of flag or coil. It did it again here. It almost did it there and backed off. Bottom line is, though, this is a perfect day trade. And by the way, the stock is now trading about 80 or 90. So a lot of times we find stocks that are day trades because of the thrust, but that thrust may be initiating a new trend. That's why I keep stocks on my watch list, because sometimes the day trades and the swing trades turn into long-term trades and big, big movers. Now, I'm going to give an example of a low volume ebb. I really talk about this a lot. It basically is a balance between buyers and sellers. It's like a Mexican standoff. Here's an explosive move. The stock literally went from under 5 to almost 8. That's a 3-point move in 3 minutes or 6 minutes. This is a 2-minute chart. So my point being is that in the first 6 minutes of trading, a stock's up 60%. How many people would look at that pattern and buy it? Well, this was a little tight little 10-minute wedge, and then it broke out again. Most of us did not go in here. We went in there at about 775. But very quickly, it ran up to 9 3/4 for 2 points right there. And then, because of the big, big move, it needed to digest those gains. It then went into a multi-hour coil. But quiet near the apex, very, very, very quiet down here. Very quiet in there. When it popped on volume, you can see how the run-up took place. And it literally went from 8 3/4 to 12 1/4. What a move that day for a stock to go from literally under 5 to 12 1/4 at the close. Huge move. But we do catch those kind of stocks. And we catch a lot of them. Let me show you a couple examples. Here's a stock from recently that and that, by the way, every once in a while, maybe once a week, maybe once every 2 weeks, catch a stock that just goes ballistic. This is being one. Take a look at this. Oh, excuse me. I want to widen this a little bit. There we go. Bring it down. And there you go. So how about this stock? Trading at about 4.5. Yeah, the prior day in the pre-market, it ran up to 5 3/4 and then set up a flat. By the time the market opened, it ripped through 6 and went all the way up to 740. So it's already gone from 450 to 740 within a half hour of the opening. So here's a stock that's up 75%. But what did it do? It formed the perfect pennant. When it broke out there, first, most of us went in there, but those who didn't, I put a second day trade on right there. And that was about 7.5. I kid you not, in half an hour, this stock was trading at 12 or 11.5 what was it? Yeah, almost 12. So most of us got out. Trading was halted, and I said this on the second halt. It was halted there and there. Usually the second halt, well, you will get some selling, so we went out there. It came down and went up again, but the rest of the day did nothing. But the point being, every once in a while you catch wildfire. And in this case, anytime you get a stock that goes from 6 to 12 that quickly in about an hour and a half, 100%, you need to take it off the table. I keep yelling at people in my room because they get too piggy. You just really want to be careful with that. Now, another example is CNET. Hang on a minute. I'm trying to bring this up for my system. There it is. Would you believe this stock, folks? Gapped up. Okay, really big gap. From like $1.15, it was trading at 3.5. It tripled in minutes. And then it went to a quiet coil. We didn't buy it. Some of us tried to buy it there, but here's where I bought the stock. After it popped and flagged and then broke out. And I was trading at about 3.25. In an hour, it was almost 4 3/4. And it went to another coil. Then it broke out again. And by 3 o'clock, 3:15, it was a $12 stock. When we first got at 3.25. Yeah, we made almost 300% of the money in 5 hours. Pretty amazing. But every once in a while, you get a runner. Now, is there anybody that sees this chart as at any point in time that this stock broke support? It didn't break there, or any of that line there. Popped and flag, and this is a nice little 5-wave. Let me show you something interesting. This is a 1, 2, 3, 4, 5-wave move. And this is a 1, 2, 3, 4, 5, fifth of the fifth. If you do basic Elliott wave, and you'll know that 5 waves have subwaves, and they also have 5 waves within that each wave, or they tend to. Sometimes less, sometimes more. But this was a perfect sell, fifth of the fifth. So most of us, I told to get out around 10 or 11. They got up to 12. Because if you look at a measured move on these legs, right about there, 10 was my target. At that point, I certainly told everybody to raise your stops to about the $9 range, and then some of us got stopped out here on the way back down. But you can see that every once in a while, if you follow my rules, you will have those kind of trades. Now, here's one just from last October. Cons, the retailer, gapped, ran, and wedged, and when it broke out of here at about 29.40, we bought it. It then popped and coiled. No reason to sell it. Popped and retested. Popped and from the little flag, and then exploded. On this move up, I told a lot of people to take some off the table, if not all of it, and put a stop the rest under here. I said stop the rest under here around 30 3/4. It got right to it, bounced, retested it, and then eventually at the 32. From where we first entered it, at 29.5 was a nice 2.5 point trade, but in a nice parallel channel. And the key is day trading. When you get a channel runner, it's a stress-free trade because there's nothing to do except watch it go up and or raise your stops. This did not violate support either here, or there. And so, or there for that matter. And that was a nice little early pop and wedge. Notice at the very apex, the very low volume in here, this is what you always look for when you're day trading. Stocks that are trending and then acting like in a normal phase, which would be up on good volume, pull back on very low volume. Pop up on good volume, pull back normally. So that's what you see with that. Another example, and look, folks, it's really not rocket science. I've developed this. I've been trading for 55 years. I just turned 71 in December. At the energy of a 30-year-old, that's what they tell me. Nobody believes I'm that age. But the point being is that I believe that do your work, spend whatever time you need to, but it's not rocket science. If you take a look at a chart like this and you see a stock pop and coil, and you get very low volume near the apex of that coil, wait for the pop. Right there's the go in. Okay, at this point it was about 565. It quickly went to 6 1/4, and then coiled and broke out again, and then flagged or coiled and broke out again and flagged. And again, didn't violate there, didn't violate there, didn't violate there. It tested it, but that was what you want to see, a successful test. Each time the volume picks up again on the upside. Eventually, from where we got in on a perfect wedge, early coil wedge on low volume at 5, I think it's 565 to 8 by the close. Nice day trade, about 50%. Those are the kind of trades you want to make. And that's the kind of trades we do in our room every day. Now, how do we use moving averages? Well, I also use, the 10, as I said, the 10, 21, and 50-day moving averages. And I look for moving average crossovers. I look for moving average support, particularly 50-day. There's a book called Monster Stocks by Jonathan Boyk, B-O-I-K. I love reading that stuff because he went over all the big winners of the last 10 decades, meaning going back 100 years. And I don't know how he got this information, but he would show a chart pull back to the 50 and say Morgan Stanley bought it here, Fidelity bought it there, and he would just keep talking about stocks running up to 50-day moving average. An example would be Micron. Broke out of the base here, popped and flagged, popped and tested the 50, tested the 50, tested the 50. Beautiful rising 45-degree angle type pattern, basically from lower left-hand corner to upper right-hand corner. Eventually, this stock went to 40-something. Okay, so from where we first spotted it down around the 6.5 range. Those are the kind of stocks everybody wants. Pandora is another. This one I didn't touch until it popped right there on volume and then flagged. When it broke out there, we bought it. That was at 13.75. And within about 6 months, it traded up to 32. These are kind of stocks that look at the trend line, look how it held, testing the 50, 50, 50, 50, holding that little red dotted line, which you probably can't see too well. But it's there. 50-day moving average is very important when we're talking about daily charts. Now, even on intraday charts, I use a lot of examples of moving averages, both up and down. And by the way, I'm not just a long player. I want to show you something. How you can identify major turns on stocks using the 50-day moving average alone. But in this case, for example, check this out. We have a 1, 2, 3, 4, perfect 5 waves up, right? And in this case, when it came down and bounced back up, the moving averages crossed over. The stock failed at the moving averages. That's what we call a rising bear wedge or a kiss back as well. Channel was broken. The trend line was broken, I should say, and it slammed back. We put out a short at about 40.5 on this one. It came down to 30, bounced to resistance, came down again, flag, rising wedge, and eventually, on this chart, 17, but this went down 11 or 12. But we caught the long and the short. Another example of the same thing would be this. Play both sides of the coin, folks. This is a perfect 1, 2, 3, 4, 5-wave move, and then a 3-wave consolidation, and then another move, and then another consolidation, and then a 5th wave spike up. And look what happened at the top of the channel. It reversed, and then breakaway gap to the downside plunges all the way from 85 down to 64 in about a week and a half. And then when it bounced right to where the moving averages were crossing over, and then down goes Fraser. 1, 2, 3, 4, 5-wave decline. We covered it down there, but it eventually went low. It's basic stuff, folks. Stocks go up on good volume, they go down on big volume, and when it reverses the pattern of going up on strong volume and pulling back on low volume, by going down on heavy volume and rallying on low volume, that's when you know it's time to exit. And maybe even go short. I want to show you a really cool example of one of our best trades in the last few years. Check this out. This is almost hard to believe. The stock popped in the morning from about 18, 19, all the way up into the 21.5, 22 range and put a perfect flag on. But it was quiet volume-wise. When the volume came in here, we got into it in the 22.5 range. Within an hour, it was 27. How's that for a trade? But notice when it came down to the prior high and did not break support. I deem that as support, not here. It bounced and coiled, formed a rising wedge, and then broke out. And would you believe from this point at 25, the stock went to 34. When we first got in the morning at 22 to 34, 12 points in 3.5 hours. Pretty amazing, but every once in a while you get those day runners, you want to stay with them. The actual trend line I had drawn out there, but it should have been drawn across these lows here, because when it broke there, that's when it really broke. The point being is that The actual angle of ascent was a little steeper than what I show you here. But the other thing is what I am constantly doing videos all day. I come on, I'll give you a little alert that I'm coming on to do an update. I'll show you how the patterns are progressing intraday. I'll actually move my lines, my trend lines. I'll show you support, resistance, and moving averages, and so that you not only can make money but also get an education. Because what people tell me is that 3 months with me is like 3 years in the classroom. I had one guy email me the other day. He's a brand new member. He said to me, "I just paid for 10 years of subscription on the first trade with you and your site," which I love to hear. Ken, I'm not clear on how much time we have. How much time more do we have? About 10 minutes?
Your time's up now, but feel free to keep going. I know we each do half an hour is the schedule, but I love it. So keep talking. You're one of the best in the world, so your voice should be heard. You're one of the best. So, but
okay.
Technically we're about half an hour.
Let's give a few more examples, maybe take some questions. Look, in this case, Solar City exploded in the morning, and then have what we call a falling wedge. I wait for falling wedges always to break out first. We went long right there at 49 3/4. From 49 3/4, it ran to 50 and change, coiled, broke out, pulled back, formed a big wedge, and eventually by the end of the day it was 52 1/4 from where we got in at 49 3/4. So it was a nice 3-point trade. That's the kind of thing we want to see. So from there we will I'll usually do exit at club, market on close on something like that for me. Like people always say to me, should I hold this overnight? And I say, is it a day trade or a swing trade? If it's a day trade, sell it. If you want to hold it overnight, that's on you. And I could go on, folks. I'm doing it, by the way, I'm doing a 4-hour training seminar at the Traders Expo in New York at the Midtown Marriott Marquis at Times Square on Sunday, February the 25th. If you guys are around, you should attend that training seminar. It's invaluable. I basically go over all the chapters in my book and show you all of this kind of stuff in much more detail. So Ken, I can leave it there and take some questions. If anyone has any questions, I'd be glad to answer them right now. If you have any questions about any stocks or something, feel free. I can give you my take on a few people if they'd like. If we don't have time for that, Ken, let's just move on.
Yeah, let's move on. Maybe if you can give them an email, if they can shoot any questions your way, because we did have a few come in, and smart questions too, folks, but is there a way they can reach you by email?
Well, you can always send it to Harry@thetechtrader.com, thetechtrader.com. But more importantly, I just want to let everybody know that, again, just to repeat what I said earlier, we now have a new free offer for anyone listening today. You can come in for 2 weeks for free and have all my services. My day trading room. I have a trading room with 300 to 400 people in every day. Really good people. No egos. Some smart traders, been with me 10 and 15 years, a lot of them. And so come in and enjoy the trading room. The charts of the day video I do every night. The weekend webinar. I do a 90-minute weekend webinar every Saturday morning. And it's really invaluable because it summarizes the whole week, and I show you the best chart patterns that set you up for the next week. And I'm constantly on the site all the time, 24/7. And I'm always checking in. So if you have a question and you're a member or you're just a trial member, feel free to send me that would be the best way to get a question to me. But just sign up and ask me a question. I'll be glad to answer you.
Yeah, good answer. Yeah, thanks. Go ahead, Eric.
Thank you very much for having me, Ken. It's always been a pleasure working with you.
Hey, you too, Harry. Thanks so much. And I highly recommend Harry Boxer. He's one of the honest, strongest, best people out there in the whole industry. He's got outstanding charts and great technicals, as you can see. He's one of the finest people out there in the industry to learn from. So highly recommend Harry Boxer. He's one of the good guys. So you guys try him out. He's really good. And for all of you listening, really pleased to work with Harry. He's one of the best and the brightest out there. So.
By the way, here's another example. Here's another example of one of our recent swing trades that did great. That was actually last year, but we have so many that look like this every day. It's amazing. You'd be surprised, folks. Look for these trends. If you're looking at a chart, look for these trends developing early on because they tend to continue to go. That's my tip of the day. Bye-bye, everybody.
Hey, bye, Harry. Appreciate it.
Okay.
And one of the things that I really like about Harry Boxer, I was telling him before tonight's event, he's the other great breakout trader. He and I are the only two people I know in the industry that really like especially strong breakout charts, and it makes your life as a trader that much easier when you start with the trades on your side. For example, day trading charts. And I think Harry had even mentioned this on ICHR. This is a good example of a minor gap continuation. And we're going to look at some examples for both day and swings. Harry did a great job of covering day trades, so we'll do just a few. I'm also going to cover swing trades, but minor or small gaps that continue, or 2-day high breakouts that have at least a couple of points of range on good strong volume really make your job as a trader that much easier. And by the way, you know what Harry and I teach, it's not just for day traders. You know, I mean, I run trademastery.com, Harry runs detectrader.com. You guys should try out both of our services. But a good day trade can be the start of a swing trade. You can take some out, do an intraday swing. And maybe you go on 500 shares, take 300 into the close, let the other 200 ride in case it runs up. A high volume close like this tends to run really well. And let me give you a quick rider downer. A really good strategy that I've perfected since 1999 is one in which I will go in long right above a whole number, and then I'll sell the 80 or the 90 cent mark right under the nearest whole number. You may have seen my article in Stocks and Commodities magazine on that, but that's one of my favorite go-to trades from back in the 90s. I'll hit it long at 17.20, 17.30, go to cash at 17.80. And that's a good quick 50 cent, 60 cent round trip day trade. So look for whole number support and resistance in these channels as well. So we're going to mostly focus, since Harry did a great job of intraday coverage, I'm going to look at a lot of swing trades for you guys. We got some exceptional charts. I don't know who else is trading crude right now, but I'm trading things like UCO, oil, USO, OIH. These have really good, this is a 90-day daily candlestick chart, and you can see crude's gone from, this UCO chart's gone from 18 to 27, so we got a 9-stick run in this. Before I look at more charts, before I forget, let me tell you what you're going to learn tonight. Who I am. You may have seen me every month in Stocks and Commodities, trading on momentum. You may have seen me back in the day on Market Watch. That's a broker I actually used to use. We used to use Daytech. The big thing was 60-second fills for only $10 a round trip. Anyway, times have changed since 2001. But anyway, you may have seen me. I highly recommend seeing both of us at the Traders Expos. If you get a chance to see Harry in New York, take that advantage. He's a great guy to learn from. Remember, we were there, and his book sold out in record time. He had it's like a couple hundred books on the table at the New York Expo a couple years ago when it first came out, and they disappeared in a flash. So I'm a real money trader. I've done as much as 4.9 million worth of trades in a single year. Boom, flawless victory. He shoots, he scores. I didn't make 4.9 in profit, but I did 4.9 worth of trade. So I'm a real money trader. Relentlessly on pursuit of testing and experimenting so I can figure out how to make my own trades better and how to help all you folks as well. So I'm a real money trader. That's a 1099 from Interactive Brokers. You may have seen me all over the planet. That's cool. We're going to look at the strongest trades, minor gap continuations, multi-day high breakouts, and entries following wide candle days. I can say that 3 times fast. We have a bearish signal here though, right? We had a shooting star and a bearish engulfing. Whenever you see a shooting star as the left side of a bearish engulfment, that's not good. So stop the madness. There's got to be a better way. I'm long, but I'm going to trail a stop at, say, 25.50. You can always tell. I train so many thousands of traders, both in person and over the internet. You can tell a great trader by how tight their stops are. For a swing trade, 25.50, not down here. Back in my early days of trading, I was kind of rationale, well, maybe it'll find support down here. But now I learned it's all about making money. So you're trying to trade wide, not deep, or trade many different positions and use trailing stops. Anyway, the point is, I'm going to look to get long, scale in on this guy if it gets over 27, if it breaks resistance up here. The best kind of charts you can trade are ones that have good wide trading ranges. Harry mentioned that. I mentioned that. Any good trader is going to tell you that. You want to focus on charts that have the best point ranges. So if you trade a cheap stock, I'm not a huge fan of the super cheap stocks like this one, but if you do trade under $10 stocks, things that have potential to double, like this SRNE, right? This guy ran 240 to 6. You got 3.5, 4 points of range in this guy in just a month, right? You could have doubled, tripled your money. If you do trade cheap charts, don't trade charts with, say, less than a 1-point range. A very good, intelligent, professional approach is to focus your energy instead on charts that have multiple points of range so that your profit potential is good. Another strategy to look for is trade within sectors. So I gave you the tip about oil, right? We all know crude's been going up the last couple of months. It's got plenty of room to run. So I'm going to be scaling in. I expect to make a substantial amount of money on my oil plays. You might want to consider that, hint, hint. Not a trade recommendation, but things like UCO or the oil holders, OIH. You get the same kind of chart, or USO. They're all oil, and they all make rockstar breakouts. And most of them are pretty inexpensive, under 15 a share, so that's good. But the range is pretty good. We got at least a few points of range. So that's a sector tip. The other sector tip is I want you to start looking for stocks within the same industry group. So for example, you can see this is US Steel. This is one I've traded for years. This guy came up from a base of 27. Today it closed at 39 and change, right? It's a 12-point run. One of the most important things that you'll find as a professional trader is that you need to pay a lot more attention. It's a quick tip, a rider downer. It took me 15 years to figure this stuff out, but you need to pay a lot more attention to this column than you normally do. It's not just about the directional trend strength. That's all important, and you like these nice, tight, clean, kind of like Energizer Bunny. It keeps going and going and going, and that's all well and fine, but you want to look for the point range too to make it worthwhile. And you don't want to trade, say, a $30 stock that only has a low of 30 and a high of 32 or something. There's not enough profit, potential profit in it. Another quick tip, you may have seen this in stocks and commodities, is to use 9s as sell targets on swing trades. Because 9 is where institutional traders and professionals, those of us who have been doing this a few decades, know to sell. So that's like the whole number approach for intraday, like buy right over whole number, sell under the nearest whole number. A good swing trading technique that you may want to experiment with. I've done thousands of real money trades. I know how this works. You might want to buy just above a multiple of 10 on a breakout, say a bullish cup breakout. Let's say you get in at 31 or 32 or whatever. You play around with it here. It's above the decade. And this is valuable intel. Copy that. I live here in Colorado Springs. I got a lot of friends in the military and law enforcement. A lot of respect for those folks. Anyway, my point is, have a good disciplined approach. Trade within the 10-point region. So say you buy 31, 32. My exit target, I'm fine. I'm happy as a clam to sell to someone at 38. If I buy 31 and sell at 38, I'll do that all day long, right? So if you're a swing trader, especially important on these 90-day daily candlestick charts, do be on the lookout for that strategy where you're getting in above a decade value and below the nearest decade. So never ever buy anything with a 9 in it. Remember, that's a good professional tip. Never ever buy anything with a 9. That looks expensive. And I've trained tens of thousands of traders to sell 9. So you might want to not buy anything with a 9. Be a seller. A good professional breakout strategy is you can always buy new highs. Speaking of which, always have a false breakout filter. How many times have you ever gotten, let's say you buy 40.1, which would be a stupid place to buy. But let's say you buy 40.1, and then it goes up a little bit, you put on the trade, and then it collapses. How many times has that happened? Does that sound familiar? Are you with me on this? Say aye. I'm channeling Tony here. Do you agree with me or disagree with me on this? If you agree, say aye. It's really frustrating as heck to get in because it was taking out new highs. So I get in. And then it goes down and you get stopped out. And then to rub salt in the wound, it runs up to 50 without you. How many of you have ever been directionally, whenever I speak at my money show appearances, I always say this. How many of you, show of hands, have ever been directionally correct? Ultimately, the frickin' stock does keep going up, but not before it stopped you out on a pullback or a false breakout. Stop the madness. There's got to be a smarter way, and the smarter way is to use at least 50 cents, another rider downer. You may have seen this in stocks and commodities, so hopefully not a surprise, but use a 50-cent filter or so above the obvious dumb money. See, dumb money's going to buy 40.1, right? Inconceivable, to quote the Princess Bride. Don't do that. Wait till at least 50, 60 cents before one puts on a trade to avoid the potential of a false breakout. So do have a safety buffer above an obvious resistance trigger before you set an entry. So let's look at some rockstar charts here I've compiled. And by the way, this doubles as a watch list. You may want to keep an eye on it. One of my favorite patterns that I've taught for years is a large green candle, a momentum candle on high volume at the right side of a bullish cup. And often that will attract new buyers. The way that I trade these is I'll put in a buy stop limit order 50 cents above the high here to get me in on the breakout. And we're off to the races. It's good to go. This is Weight Watchers going on a diet. Try and have a little bit of humor here. Anyway, Weight Watchers not going on a diet. It's exploding up to new highs. Boom. How much money could you have made if you bought this on a breakout? So you got a small breakout here, a region right above this large green candle. And so you go in above the high. Here's what I mentioned earlier about the importance of range. So if you're trading out there and you know who you are, trading $3 and $4 stocks, don't trade the horrible ones that only have a 1-point trading range. I went from 2.25 to 3.25. Who cares? You'd have to trade thousands of shares. As a professional trader, what I'll do often in my swing trades is I may be, like Harry said, I'll do often 3, 4, 5 trades in a day for a day trade. For swing trades, I may be in a dozen, 15, 20 or more. I've done as many as 304 real money trade exits in a single morning. That's when I had a lot of coffee. But the point is, you want to trade wide, not deep, as I said in my Money Show interview. Make sure and trade instruments with large point ranges. So your upfront risk should be as small as possible. Here's our energy triple ETF, right? And again, here's that same exact pattern. It's one of my favorite chart patterns that I've published and spoken on for many years. Other educators copied it, but I originated this with large green candles at the right side of a congestion box or a bullish cup, even better. You've got a pre-existing uptrend, a pivot off this is the 200 SMA. Who can tell me what this is? If you have a 50, the red 50 simple moving average, moving above a 200 simple moving average. If it crosses over, that's a good bullish pattern. Anyway, the point is, my pattern is I like to look for a sequence of increasing volume. Do you everybody see this? See small, like baby bear, mama bear, papa bear, and pa-ching, we're off to the races. 50 cents above the high here puts you in over here. Epic win. Now, this is a bearish engulfing, right? Learn more about candles from my colleague Steve Nissen. Only learn candles from Steve Nissen. Don't waste your time on other people that copy Steve Nissen. Learn from Steve Nissen, my long time colleague. Learn from guys who know what they're talking about, like Steve Nissen and Harry Boxer. And hopefully you'll include me in that list too. But, people actually know this stuff. Anyway, the point is, bearish engulfing alert, sell stop order would be 40.50. Does everybody see why you'd be getting out? Because we have a bearish. You see, the doom of you guys traders is you guys trade choppy blank charts and you let your trades go far too long against you. Stop the madness. Trade strong charts like the kind Harry and I teach you. Trade the strongest breakout charts possible, and even then, minimize your upfront risk and use position sizing. Add to winners every few points. Scale out of the losers. Make sure your trailing stops are tight as heck, right? So if you bought at 35 or 36 or 37, I'm happy as a clam selling a 40.5. Game over. I can always rebuy over. If we add, come on folks, here's the audience. This is the part where you type in an answer. If we use 50 cents, now this is basic math, so hopefully anybody with at least a kindergarten education can answer this. 50 cents above the nearest high would put us in earliest to potentially avoid a false breakout where? So if you're long here, this would be a smart time to sell because this was a sell confirmation signal and a loss is supported the bearish engulfment. So we would go to cash. Or if I just saw this today, I'd put a sell stop order at 40.5, but I'd also put a buy stop order in where? 50 cents above the high here would put us in at 44. And yeah, a lot of you have been asking about recordings. Yes, I will be getting that out to you guys. Look for the email, not from me or Harry, but from GoToWebinar. They'll send you an email saying replay link, and you'll get a downloadable replay link. I'll also put it on my YouTube channel, The Trading Television, with over 10,000 subscribers. But anyway, the point is, tight stops define your success or failure as a trader. I asked Harry a couple of years ago when we did our first webinar as an open question, Harry, what's the number one mistake traders said? And he said, trading without stops. And I'll say amen to that. And I will add tight stops are really important. I'm fine buying in here somewhere, getting out here, rebuying up here. You don't get the exact bottom unless you're lucky or something. We're not in it for luck. We're in it to make profit. And you get out at the first sign of a bearish reversal. So that's ERX. Alcoa and U.S. Steel. Alcoa Aluminum, one of my longtime favorites that I cover for my members at swingscans.com. That's www.swingscans.com. Hundreds of members over the years, and it's been a really popular service. But anyway, these are the types of charts that I like to cover for our Swing Scans members. And I've got a $7 3-week trial, so with a money-back guarantee, so no risk. Anyway, the point is, Alcoa ran up out of a base of 40-ish or so. There's that valuable intel, right? A 40-decade value base over here. it ran to 50. So I would have been fine buying, say, 41.42, selling 48.49 for a round trip here, and then rebuying up at, say, 51.50, 52. It's starting to look a little ripe though, right? It's getting close to the 60 exit target. So I would be putting a trailing stop to close out a position on a swing at, say, 55. Mission accomplished. So whether you're day trading and you're looking at charts like this one, using that whole number strategy, professional price action trading is all about directional volatility and momentum. And what we're looking at is getting out while they're getting still good. And like I said, the two biggest mistakes in working with thousands of traders since 1999 are you guys use too big stops, you try and jump the gun and get in too early, you trade choppy charts, and you don't exit on time. Okay, so a good professional approach to help you with that, to help you avoid that, is to have rules of engagement. So let's say trading rules. So if something's gapping up above the previous day's high, like today's PSTG, you get in long at 1720, your exit target, your initial stop would at most be 1680, but your exit target would be up near 1780-ish or so, because that's right under the nearest whole number. You don't expect when it starts off the day here that it's going to run to 19 or 20 or something unrealistic. You happily do your round trip from, say, 9:35 up till 10 o'clock or so and sell the 1780 at the 10 o'clock pivot. That's another well-known phenomenon that I've taught traders for many years is oftentimes the stock market pivots at 10 o'clock. You see here we had a sell-off, it bounced here, and it finally broke above new highs here at 10 o'clock. Back here on the 16th, it ran up until then. This is 10 o'clock right here. It's hard to see on this chart. Let's see. But sell into the 10 o'clock pivot. This is 10 o'clock exactly. If you do quick open range breakout trades, anywhere from 5 to 8 minutes, maybe 10 minutes in round trip, if you're doing open range breakout day trading, do sell a few minutes before 10 o'clock because often you'll get a big epic reversal right after 10 o'clock, which is what we saw here. Or here we had a base, it sold down, consolidated, and this is 10 o'clock right here, and that's close to the bottom, and then it ran up. So the 10 o'clock pivot rule. It's another one. There's 10 o'clock. You can see it pivoted on a dime today. Does everyone see that 10 o'clock? And here 10 o'clock was, I think, right here, kind of bisecting these two dotted lines. Anyway, that's the exact top. That was the exact bottom. So the 10 o'clock pivot's another timing phenomenon that I teach my day traders at tradingtheopen.com, my live room. But let's revisit, let's take a look at some additional swing trading patterns. Got just a few minutes left here, and I appreciate all of you guys being here. It's last time I did a webinar with Harry was 8 months ago. Time flies. Like one family member said to me, the darndest thing is the older you get, the faster time flies, which kind of sucks. So we got to make good use of our time online in Earth. And so learning good patterns from people who know what they're talking about hopefully can help you guys turn the corner. Anyway, congestion box with a wide range green candle, and bang, we're off to the races, right? It ran from 47, consolidated near 50, finally broke out over 50, and it ran up here to 56. Kind of late to be getting into the long party because an exit target on this trade would be 58.59. So I would just, personally, I would not be doing, it's a low odds swing trade to trade right under a decade value. I mean, price action, you could still take the shot at, say, 56.70, but it only has a couple of points of potential before it's likely to stall at least near 60. So for that reason, I would stay clear of this one for now. Here's another good chart I thought you might like, MYL. This is one I've covered for my Swing Scans members for the longest time during our past here. And you can see it's ran all the way from 37 to 47, a nice 10-point run. Okay, we got a large green candle. But again, be kind of suspicious or cautious if you see if it's getting close to 50, because that means your profit potential isn't as good. The right place to trade this guy would have been right over 40, say 40 and a half, 41, 42, be selling up here near 47, 48. And I think that can really help you if you start developing an intelligent trading plan based on volatility and likely price inflection points that make sense. Here's a bullish engulfing right here. See a bullish engulfing. Following it down, friend. You got a bullish engulfment at 5. But unless we have a time machine, that doesn't help us. We can't go back. But it is illustrative to see there's a bullish engulfment here. Shooting star there, and it kind of went sideways for quite a while. Now it's starting to dink out new highs. So we'll see if JILL runs. But again, I like the range in this from 5 to almost 9. A near 4-point range. So if you do trade cheap charts, make sure they got enough points of range to make it worth your while as a trader. Here's another one, ETFC. You can see it's traded its way up nicely with another bullish engulfing. Everybody see this bullish engulfment near the 50 simple moving average line? That's a good pivot. But again, unless you've got a DeLorean or a TARDIS, we can't really go back in time. For the fellow Whovians or fans of sci-fi like I am, you can't go back in time here, but you can start to resolve to make better trades next time you see them. Anyway, you got a nice run up here, sideways congestion, another breakout up here. This guy, earliest I'd be going long, again, not a trade recommendation, but at least educationally where I'd be going long would be over 55.5 because of the point range. This guy ran 42, 43 up to 55, so it's got 12 points of range. So you can see these types of charts have really good, exceptional volatility. And as you're looking at making a core strategic trading approach, way of life, look for things like these large, kind of like a poker tell. I won my first tournament poker series in Vegas back 7 years ago. And you always look for poker tells, or you do small blind bets to see what the response of the crowd is if you're early position. Anyway, you got a major large green candle here after a minor pullback. So look for large green candles to summarize. Another pattern that I teach is what I call acceleration ramps, and that's where something starts off slow, then all of a sudden gets excited. And it gets a nice sharp hockey stick kind of 45-degree angle breakout. I don't want to touch this guy yet, and in fact, because it's at a 9, where would be my earliest long? I spent my life, the last 20 years at least, learning how to avoid false breakouts the hard way. The earliest I would get long this guy would be 40.5. So way up in the sky. We're not going to go long here. A day trade, sure, but for a swing trade, I would wait till it breaks over 40 because I expect a pullback or chit-chat or trouble near the 40 resistance, decade value. Right? You'll often see that. Another good example is Square. I posted a video for Money Show. I post videos for Money Show regularly, and one of the things that I told everybody in the Thursday video I published back here was we sell the 49. And what's clever was I said that before the sell-off, right? This is Square. It's moving in Bitcoin sympathy, one of my Bitcoin feature instruments. Anyway, we're calling it long all the way up here. But I told everyone to sell the 9 at 49 because the decade value 50 will provide resistance, which it did. So again, like Harry said, like any of us who know what we're talking about, I'll tell you, it's not rocket science, but you do need to learn volatile charts that have good, strong breakout directional volatility and make a smart, sensible approach to trading something you're going after. So you see the acceleration ramp, kind of a steady uptrend. Then all of a sudden it goes into 45-degree angle breakout mode. Even if you're late to the party, the trade setup using my strategy would be long somewhere north of 40, say 41, 42, whatever you get in at, with the sell target of 48, maybe 49. But whatever, that's the round trip, is above the decade and out at the 9 near the previous upcoming decade. Okay, so those are the type of charts that I think make sense to trade. It took me a lot of years to figure this out. I'm a former corporate statistician at the Ford Motor Company and a certified quality engineer, and I used to be a quality management consultant for companies like Rockwell International, Ford Motor, McDonnell Douglas, Sheraton, Chevron. A lot of big companies hired me to come in and help them improve operations with flow charts and team-based problem-solving approaches with numbers. And one of the things I think will really help you as a trader is to set higher standards, ask better questions, break through your boundaries. The punchline is, once you learn patterns that are worthwhile to trade with good, strong directional bias and tight channels, it helps you simplify your approach to scanning and managing your entries and exits because you have a much tighter criteria approach. Yes, we will be sending a video out later. Now, I specialize in stocks, as you can see here, usually in the $20 to $50 share range, maybe as high as 70 and then sometimes down in the teens, but My specialty is this kind of chart, $20, $30, $40 a share, because they have the best, like Harry said too, you look for leverage. I don't trade Apple or any of the FANG stocks. You might want to, and what I teach too, and what any of us who are good breakout traders can teach you, and let's say you're doing directional options, let's say you're doing bullish options strategies, like selling puts would be really smart, right? Or if you're a newbie, maybe you're just buying calls, ABC kindergarten stuff. Or if you're doing more exotic strangles or bull credit spreads or butterflies or iron condors or whatever you're doing as a trader, selling puts against good breakout charts, whether you're doing weekly options or monthlies or whatever, set up your strike price, look at whether you're doing in the money and do a couple of contracts. You can use this for options trading as well. So you can derive a good trading strategy based on relative strength of these patterns and help you figure out. So let's say you're selling puts and it's in the money for you, but it's pulling back here. You might want to go to cash and get rid of it right now, kind of thing, because it's starting to pull back. Or if you're long the underlying stock, if it loses 40.5, would be a good sell stop order. So does that start to help? I hope that I'm giving you some good, clear guidance on the types of charts that a good professional looks for. We like clean charts, nice, clean, noise-free charts that have reasonably good, strong directional strength. So this is a 15-day, let me wrap up with a quick walkthrough of these charts. This is 15-day, 15-minute charts. Look at that chart. You could have frickin' thrown darts at it and come out a winner, right? It would have been really hard to get stopped out. Now, if you're one of those traders who's still losing, or if I always get nervous laughter and people averting their gaze when I ask my money show audiences, how many of you know who you are, conceal your trading losses from your spouse? You might have a problem. You're probably over trading with far too much leverage on just a few picks instead of diversifying with, when I swing trade, I may start off with just 800, $1,000 worth of underlying. So it might be just 15 or 20 shares or so of something like this. I can always scale in every 2 or 3 points if it works out. And if it doesn't, it's not going to cost me much, right? You don't want the charts that are going to bite you in the rear. You want charts that are going to look at it like a football coach with a team of stocks that you're trading, or a portfolio manager. You're looking for good, strong directional charts that make sense, that have good volatility on continuations. So this is what the close-up. Cisco, surprisingly, usually I don't trade tier 1 stocks because they don't have the volatility, but Cisco's close to it. It's got the numbers from 38 to 41. SCHW, what a chart, 51 to 56. UCL, another winner. MYL, those are the kind of charts at least I like to trade. And again, if you'd like to learn more about swing and day trading, I urge you to check me out over at trademastery.com. I'm going to wrap up. My 30 minutes is up, so I wanted to thank all of you for being here. Do learn from Harry Boxer. He's one of the good guys. You have my word on that. He's one of the top guys out there to learn from. He knows his stuff cold. He's really intelligent. I've known Harry for years, and he's one of the smartest minds out there. Here's he and I at the November 2017 Money Show Expo a couple months back. He's worth learning from. Hopefully you'll find that my training is worth learning from as well. And what do I have for you? Have I got a deal for you? Before we do that, I do want you to think about a trading action plan, put things together. What entry patterns that Harry and I have taught you will you start looking to trade? How do you identify stops, targets, and exit signals? And again, even if you're kind of guessing or trying to figure out what to do, have a reason. Don't guess anymore. Have a reason for your exit. And it has to be beyond something like simple support or resistance. A quick tip that I made in one of my recent YouTube videos, got thousands of views a couple weeks ago, was use your unrealized P&L as the key indicator to exit the trade. I don't care about the chart. If I'm up $600 in a trade and it goes down to unrealized P&L of 500, I'm going to sell because I want to bank my 500. I don't care where technical support is on the chart. That's heresy, but it's true. I'm a real money trader. It's what I do. So I want you guys to think from a P&L management standpoint, what's your pain point? What's the most that you're going to stop out with? Maybe a couple $100 is what I like to use on any single trade. I like my stops to be really inexpensive. I like my winners to be bigger, but I more importantly like them to be spread out over a dozen or 15 different trades. So I don't really care how any one trade works out. Remember, if you're up in a trade, say $600, and it goes back down to 500, whether you're day or swing trading, it's fine to cash out. You can always rebuy if it does, and usually it won't, by the way, take out a new high. So do have a like 20%, one of my traders said was a good rule. So if you're up 1,000 unrealized P&L and it drops to 800, take the money and run. Good lessons learned for a professional trader. I'm Ken Calhoun, the original Day Trading University and Trade Mastery. If you want a free swing trading book, I put it out on Amazon, so I'm selling it all day long at $1 just to get big numbers, and it worked out really well. But I pulled it from Amazon, and now it's free. Swing trading. It's really short. It's only like 15, 16 pages. A cheat sheet of my 5 favorite chart patterns, plus a lot of lessons learned. You can get that on the front page of trademastery.com. The site's currently getting a lot of traffic, so it may take a minute to load. Thank you in advance for your patience. And the last offer is my free Saturday trading week aheads. I've got almost 5,000 people registered for those. #1 in the whole trading industry that I've seen. I've never seen anyone pull that kind of numbers. Anyway, I've been running them for years. I did the industry's first Saturday webinars back in the year 2000 or 2001, back when we had to use chat, text, and all that back in the old days. Anyway, I'm still doing them almost 20 years later. Trademastery.com/free. My Saturday trading week had their 20 minutes, which is why I think the numbers are so big. People aren't noted for their patience anymore. So 20 minutes, we look at the market forecast, look at top charts and the rest of it. So y'all have been great. Thank you so much for being here, and I will see you guys coming up. And be sure to check out Harry Boxer at www.thetechtrader, THETECH trader.com, and myself at trademastery.com. So y'all have been great. Thank you so much, and I appreciate y'all being here.